Hello traders, good morning, good afternoon, depending on what time zone you might be in. Welcome to the Advanced 401 version of TI University. I will be your host, Jamie Hodge. Thanks everybody for attending. And without further ado, let's just take a peek at the content for today. Here are all the topics that we're going to be talking about today. Now, we're probably going to go a little bit out of order here because backtesting and optimization. Once we go down that rabbit hole, it's easy to waste a lot of time. I can't say waste, but it takes a lot of time to cover these topics. So we're going to save that for the end of the presentation today. What we're going to do first is we're just going to jump right into pre-market configurations. And the easiest way to go about that is we've got a pre-market channel. And if you direct your attention to the channel bar over here, I'm simply going to select the pre-market channel. And once we get this guy up, you'll notice, just like all the channels, you're going to see 2-3 windows curtailed to the topic at hand here. In this case, pre-market. What do people look for in the pre-market? Well, obviously they want to find things that are moving in the pre-market, very similar to the way that something might move in the regular session. So what we're going to do here is just kind of expand this intraday chart out a little bit. We will leave it on 5 minutes here since we're looking at pre-market activity. You might notice in the intraday chart here, I've got these shaded areas. We've got the little pink mauvish area and the purple area. Now the purple area, if we right click and go to properties, that's post-market. So we're going to go ahead and get rid of post-market. Now we can see the pre-market session and the regular session unfolding in front of us. So expand out a little bit. All right, so backtracking, what do traders look for in the pre-market? You want some action. You want some things that are either going to move up, hopefully for maybe some long money, or maybe things are moving down for you short sellers out there. Now, we're first going to focus on these top lists over here. Notice the T in the upper left-hand corner. These are top lists showing us stocks that are gapping up and down from the prior close. All right. So let's just take a look at the one of the top up gappers here, CODX, and let's focus on the close from yesterday. I mean, look how flatline that thing is. Big day today on the daily. But the bottom line is this stock was nice and sleepy. And you can barely see the bars here, but it basically just flatlined all day yesterday. But look what happened before the open, or before the pre-market session began here. We had a gap up in the pre-market. All right, so we closed here, and if I expand that out, boy, it's hard to see those bars, but we could say a close right around $1.13 yesterday. And then obviously something came out, could have been news driven, maybe not really important. The bottom line is we had a large gap up, a difference between where the stock closed, and then in the pre-market we can see the first tick was at 276. And then look what happened in the pre-market. We got another push up here, topped out right around the 350 level. But take note of the bars in the pre-market. They look very similar to the way this thing is trading in the regular session today. So we could say decent liquidity, decent opportunity for a little upside here, but more importantly, also a little room to the downside as well. So lots of liquidity. If we hover our mouse over these candles right here, we can see the volume levels in each 5-minute candle. 46,000 there. 79, almost 80,000. Okay, so this thing was very liquid in the pre-market. Upside opportunity and downside opportunity as well. So we could say that this was a decent pre-market trading candidate. Now we can also use these patterns that develop within the pre-market just like we would in the regular session. So if we mark that initial pre-market low right here, we had some nice activity here. Look what happens when the regular session commences and we see a break below that pre-market low there. All right, we get a continuation to the downside down right about to the $1.88 level. All right, so some decent downside activity that you could have keyed off of regarding the pattern that had emerged or that had emerged in the pre-market level there. So a pretty good example of something that was very liquid in the pre-market this morning in the form of CODX. Let's take a look at another one here, HZO. Okay, so this one not as pretty, so to speak, has CODX. Nice liquidity, nice volume here. Take a look at HZO, a little bit spottier. All right, once again, looks like it was very sleepy yesterday, but a nice gap up in the pre-market, a push higher, and then a downturn, very similar to what we saw in CODX once the regular session opens, but the stock is still up nicely from the prior close. And just a word about gaps. The gap that you're seeing right here is not taking into account the pre-market ticks. It's simply looking at the difference between the prior close from the prior session to the first tick of the regular session today. So the point I'm trying to get at here is that the gap metric, whether it's in percentage or dollar amounts, is what we call static. Once the session opens, these metrics do not change. So can't really say I'd be too enthused to trade this one with these gappy bars here. Looks like it gets a little bit more liquid as the pre-market session continues, and then we can see what happens in the regular session here. Now, let's look at the other side of the coin, things that are gapping down. GNPX at the top of the down gappers list here, gapping down 39.2%. So if we looked at the close from yesterday, which is $1.89, and the first tick of the opening candle today, $1.15. All right, that accounts for the 39.2% gap that we're seeing here from prior close to next open. Now this pretty interesting pre-market activity. Notice how it sets up this little range here as it ebbs and flows in the pre-market, only down a little bit compared to this drop here, but once again, we can apply this simple range break pattern in the pre-market as well. So we're going sideways here. Looks like this thing's kicking out some decent volume, 15,000 in the 5-minute candle. Come on, give me my tooltip here. 24,000, almost 25,000, so decent liquidity. Keep in mind these are 5-minute candles, so that's some hefty volume in a 5-minute candle, 20, 30,000 shares. And then we could have played off of this range break here. Once we get the tick down here, we go sideways for another 5-minute interval, and then whoosh, boy. This is a perfect example of a stock taking the elevator down, right? We always say that stocks take the staircase up, they take the express elevator down. This also applies in the pre-market as well. So a really good short opportunity in GMPX, just playing off of the pre-market range that had been established. We get a break here and a nice move. I mean, we go all the way from $1.67 down here to the dollar level. So that's some really great pre-market activity, assuming you're a short seller. And then decent liquidity in the regular session thus far. However, the stock still down nicely. Let's take one more look. AGTC here. Close over here at 986. Regular session opens at $7, accounting for the 29% gap down between prior close and next open. Now, we could say decent liquidity in these bars, decent volume, but a little stretched out for my taste. Not really a whole lot of clarity in what we're seeing here. Big bars, big wicks, probably not the most fun candidate to pick out as far as pre-market trading goes. And once again, the pre-market activity, we apply the same types of things that we like to see in the regular session. So, don't know about all of you sitting out there, but typically in the regular session, these are not the types of charts that I like to focus on. I like to focus on tighter formations, not these big crazy wicks, so forth and so on. Okay, so once again, up gappers and down gappers can be excellent candidates for pre-market trading a lot of the time, but not all the time. So things that are gapping up and down typically might be good candidates for pre-market trading based on the gap and why they're gapping. Sometimes it's news driven, sometimes it is not. Now, let's focus on this window at the bottom now. Different than the top list, looking at different things. The pre-market movers window is actually a multi-strategy window, as we can see from the M in the upper left-hand corner here. If I right-click and hover over strategies, we can see there are actually 4 strategies resonant in this window. The check mark indicates that they are active. If I didn't want to see one of these strategies, I would simply uncheck, and then that strategy would not become active. But we'll leave them all active for now. And notice no ticks after 8:30 a.m., which is when the market opens, since I'm in the central time zone, 8:30 open. So this is only going to be showing us things that are moving around in the pre-market versus these windows, which are just keying off of the gap, and then we size it up and see if it's a good trading candidate for pre-market activity. However, this window is going to be more focused on action. So if I right click and go to history and I remove the check mark from real time, actually, let me do this, show all. This is going to give us a peek at everything that was being triggered before the market opened. So you can see all of these were pre-market highs, right? Maybe they gapped a little bit, maybe they didn't. I just clicked on Yang here. Now we don't see Yang over here in the big up gappers, right? But notice it was hitting pre-market highs right before the open and had exhibited some pretty decent action in the pre-market. So sometimes we're going to have overlap. Sometimes some of the stocks coming through here will be showing up here and vice versa, but not all the time, right? So Yang in the pre-market, if we go back further, we would probably see more new highs. We're looking at this one right at the session open, but if we scroll down here, we probably would have seen Yang hitting pre-market highs this whole time here, okay? And once again, we can take these patterns and extrapolate, what we like to see. Pre-market opening range break would have led us higher on this one. So once again, not necessarily showing up on the biggest gaps, but very similar to some of the stocks that we've seen in the up gappers window. So pre-market highs and pre-market lows, you'll apply those just like you would in the regular session. A lot of people seem to think that pre-market is vastly different. What I will say about it is sometimes the liquidity and continuity of charts can be different, but for the most part, we're looking for the same things in the pre-market as we would in the regular session. So pre-market highs, pre-market lows, goose showing up, not the most conducive pre-market activity here, and so forth and so on. Pre-market highs, pre-market lows. Now, when we get down here a little bit further, we're going to start to see the high relative volume hits kick in. And just like the other ones, we might pull them up and notice, not the best pre-market liquidity here, but that's the way the game goes. Some of these are going to be very active in the pre-market. A lot of these, especially in the high relative volume category, are going to be thinly traded. We're going to see more gappier dash type representations, which just tell us, hey, not that great on liquidity, all right? However, some of these will be more liquid than others. You can barely see the pre-market activity here. Little pink area right here seems to be the only active bar there, which, by the way, when you see these types of plays, well, I can't speak for everyone out there, but when I see this type of pre-market activity, what can you really derive out of that? Not a whole lot, okay? So just keep that in mind. This window is going to be spitting out things that are doing high pre-market activity in a relative volume sense, stocks that are running up, running down, as we can see from these alerts. And then we just have to size it up in the moment and see if the liquidity is conducive for pre-market trading. So between the gap ups, the gap downs, and the multi-strategy window, plenty of fuel to give you good ideas for the pre-market trading session. All right. That's what we got going on in the pre-market. Once again, the pre-market channel is where we go to find these things. Now we're going to talk about compare count windows. Next down on the list right here. I always say probably the most underutilized window out there in the suite of windows that we offer in Trade Ideas. We can always just click up here on the new option in the TI toolbar and come down here and click on compare count. When we do that, we get this panel to pop up, and you can see before I click OK, this is very different than all the other configuration windows. We have actually a side for green data. We have a side for red data. I'm going to go ahead and click OK here. It's going to take us back out to the front of this window, and let's see what it says here. New highs versus new lows. Notice the symbols scrolling across the bottom ticker here. If we pop back in here and check configure, and we go, okay, well, what's going on in the green data side? This is basically a freestanding alert window for the green data and the red data side respectively. And we can see we've got a bevy of alerts here: post-market highs, pre-market highs, and new highs. We've got some filters in place, but very sparse filters, stocks between 1 and 250 with average daily volume of 10,000 shares a day. So while this will not get you every stock in the market, it's going to come pretty close, right? If we eliminated the filter set, we would get any stock hitting a daily high. Even if that's a very obscure stock hitting a new high by a penny and it just stops, that would qualify as a new high, right? But the bottom line is this: what are we going to do with this window? Well, as the name states, we're going to keep count of things that we think are important to keep count of. Now, if we remove the filters here, and you know what? Let's just do that. I'm going to remove pre and post market. I'm going to remove all the filters. And if we did this, and then we have to do it to the red data side as well, then in essence, what we would have is the tick. All right, it's what this window, the idea for this window was based around. Now we're going to be getting any stock in the market on the NYSE, on the NASDAQ, anything that's hitting a high or low, could be by a penny, doesn't matter. If it's hitting a high or a low in the session, it's going to come through here. And as you can imagine, you're probably going to get some very thinly traded stocks in here. Maybe they also have big spreads. In essence, things that you would never want to touch as far as a trading perspective goes, all right? Just not the type of animals that you want to go hunting for here. But the point I'm making here is that in essence, what we've created is the tick, okay? The tick's been around for a very long time. It's a metric on the big board, simply showing a ratio based on stocks hitting highs or lows or gaining or losing during the regular session. So, based on the tick, and is the momentum turning? Has it been going down and now it's starting to wane and turn to the upside? That might give us an idea of what the market's up to, and vice versa. Market's been trending up. Now we're starting to see more stocks hitting lows than highs. Could indicate a downturn. But the beautiful thing about our version is that we can create anything that we want, right? Anything that you think is worthy of keeping count, you can use this window to do it, and you can get very simple or you can get very complex with it. All right. So real quick here, I'm just going to revert back to my default layout. And here's a real world example of a compare count window that I use. And I'm going to pop into configure here. We're going to take a peek. And in the green data side, I've got new high as the alert, but I've got some more I've got a realistic filter set in play here. And what do I mean by that? Well, number one, you'll notice I don't really have any min-max prices. I don't really even have any average daily volume requirements. But what I do have that really thins this window out a bit is a market cap with a minimum market cap of $4 billion. So there are actually 9 zeros behind this 4 here. You just can't see them all. So we're looking for stocks that have to be meeting the market cap, or they have to have a market cap of 4 billion or more. All right. Now that's not to say some thin ones might not come through, but I can quickly size that up on the chart and expel those symbols if I feel the need. Now, in addition to the 4 billion market cap, we're saying a new high has to be occurring, and 1 minute volume as the new high is being achieved has to be 3 times above normal or greater. Now, in addition to that, we're going to kind of lump in this other topic here: eliminating ETFs with a filter workaround. And the reason I wanted to bring this into the compare count window example here is that's what I'm doing right now. I'm eliminating ETFs and iShares from this scan by using the earnings per share filter in a way that it wasn't originally designed for. Obviously, the reason we invented the earnings per share filter is so if we wanted to do so in our scans, we could say, you know what, the companies that I'm looking for, they at least have to make 50 cents a share. Or maybe I'm looking for companies that are losing money, in which case I would use a negative value in the max field. All right. That's what the earnings per share filter was originally designed for. However, in this case, by using these settings here, in essence, what I'm saying is the companies have to at least make some money, at least a penny a share, or they have to lose money. All right. Now, why do I care about that in the world of ETFs and iShares? And how is this going to weed out ETFs and iShares from my scan, right? Well, the reason being is ETFs and iShares do not report earnings. These are all the tracking ETFs for the SPY, the Qs, the Dow. They walk just like a stock. They talk just like a stock. They have a time it sells. They have a level 2, but they do not report earnings. So by de facto, we're weeding out all ETFs and iShares by using the earnings per share filter in this capacity. All right. So it's a cool little workaround because before we figured this out, we had to come back to symbol lists. We had to constantly maintain a list of ETFs and iShares, and we had to use the exclude functionality and point to the ones that we wanted to weed out and constantly update the list. All right. It got the job done, but it was cumbersome. So now we can just leave this on all symbols. And as long as we're implementing the earnings per share filter in this capacity, then we're good to go. It will by de facto weed out all ETFs and iShares. All right, so that's how we're using that filter to do all the weeding out for us, which is nice and easy. Now on back to this compare count window. All right, so once again, we're looking for highly capitalized market cap stocks here, 4 billion or more, hitting new highs or lows with accelerated 1-minute volume. And the way that I personally use this window is I let it run right off the open, and then 15 minutes into the open, I look at what the readings are here, okay? And a lot of the times it'll be, 55% green, 45% red. Today was a different case. If we look at the SPY and the action that we had today, I had probably slightly over 70% red, call it 78%, I think, this morning, or 75 versus 25% on the green side. The move was extended in the first 15 minutes, okay? But a lot of the times, if we don't get a crazy wide range bar on the open, and we just kind of get some, lackadaisical volume, then this compare count window can kind of give me a peek into what might be in store for the rest of the session. Today, the numbers were a little skewed because we did have quite a substantial move down, so it threw the numbers off a bit. But a lot of the times, if we get a tamer opening, and all of a sudden I start to see 56, 57, creeping up to 60% green, a lot of the times that can tell me, okay, we've got a gap down here today, but I'd look to focus more on the long side if I'm seeing a bigger ratio to the green side on any given day. But anytime we have a big run in the first 15 minutes, whether it's up or down, it kind of throws the numbers off. It's best at predicting when we have a tamer opening today, because we had big downside counts today, but we can see the market is pretty resilient. Came down here and tested those again, but not having it. And as we reclaim the 10 period here, which is the green line, we're starting to get a little bit of momentum to the upside. But the bottom line is you're only limited by your imagination when it comes to the things that you feel could be important or be eye-opening in keeping count, right? We can even apply one of these windows to a single stock by pointing the window just to one symbol if we wanted to do that, and then checking off bullish and bearish events in the form of alerts, right? And that can be very handy. Say if a stock's been going down for a long time on the day and you're starting to see bullish events start to increase and that bearish count start to go down, might be a good indicator that the stock has bottomed out. Vice versa for the shorting side. A stock that's been exhibiting a majority of bullish alerts, now we're starting to see those bullish alerts stall out and more bearish alerts come into the picture, could be a good indicator that that stock might be ready to turn the other way. So whether we're looking at an event versus an event, or pointing a single compare count window to a single stock, you can find some very interesting things using a compare count window. All right, now we're going to cruise right on to a single stock lookup here, but before we progress, I'm going to go ahead and load up a different layout here so that when it comes time to look at RBI and GBI windows, we'll have some information to look at here. RBI and GBI windows are these guys down here at the bottom, and we'll get to those shortly here, just doing a little time check. Single stock lookup, next on the list here. All right. Single stock lookup, not to be confused with our single stock window, which is this guy right here, which is also very valuable, and we'll leave that guy up here for now. But single stock lookup is a very handy tool for troubleshooting. So these guys right here are alert windows, and if I remove small borders like I just did, you'll see we have the A in the upper left-hand corner here. Do the same for this guy right here. And these are two of my favorite upside and downside alert windows that I like to keep my eyes on during the regular session. Simple configuration here, very similar to what we saw in the compare count window configuration. There's the $4 billion market cap again, looking for stocks hitting lows with a max of 200, or excuse me, highs with a max of 200 here. But how would we use the single stock lookup? And a very good way to go back and see, well, let me rephrase this. Myself, Sean, Andy, Steve will get questions coming to us all the time, and it'll go a little something like this. You know, I really like my alert window. It gives me good plays every day that I can take advantage of, but I'm pretty certain that this one stock should have shown up in my alert window today because the chart looks the same as all the other ones, but it didn't show up, and I'm trying to figure out why it didn't show up. Okay, so there's two possible scenarios that could play out here. As you can see, this window isn't just blazing, symbols so fast that I can't read it, but it's got a nice flow here. So it's very possible that in the middle of a trading day, while we're juggling other tasks, we might just miss a symbol and it scrolls off before we can see it. And it did come through, but we just happen to have missed it. That's one possible scenario. The other scenario is that it actually did not get triggered through the window in question. Okay, so here's an exercise that we can use to figure out, did it show up and I just missed it, or did it not show up at all? So what we're going to do here is we're just going to pick a symbol at random here. Let's pick QRVO. We know that it came through here, but let's pretend it's the end of the day and we're thinking, well, did QRVO come through? Did I just miss it, or did it not trigger from this window at all? Okay, so what we would do first is right click and give it the old duplicate. So the symbol in question is QRVO. We're going to right click, we're going to hit configure. We're going to go over here to symbol list. We're going to select single symbol and we're going to type that symbol in, QRVO. Already got a hit, so we know it came through. We can also go to history and to say show me all of today. Now we're seeing all the different times that QRVO was triggered. So this is the one scenario. Well, I guess that sandwich that I was eating at lunch got me because I was eating it. I didn't see QRVO come through. I now know that it did come through not once, but multiple times, many, many times on the day, and I just happened to have missed it. But at least we solved the mystery, all right? Now, the other scenario is you're gonna put a stock in here, and let's just pick a stock at random, or just type in something that's not even really a stock. Just typed in XXX, no hit. When I go to history, show me today, nada, zilch, nothing. So then you know, yeah, this stock just did not get triggered. Then the question remains, why did it not get triggered? It looked like all the other patterns that are coming through here. So why did it not get triggered? And the answer to that, about 99% of the time, 99.9% of the time, I should say, is the reason it did not get triggered is because one of our filters was not met. And this is a good time to point out that whether we have 2, 3, 4, or 20, 50 filter settings in here, they all have to be met at the exact same time in the all or none capacity, so to speak. All right. And so most of the time, it's one filter that did not get met. And if one filter is not met, all the other, then the filter set is just simply not met. No all or none capacity there. And a lot of the times, it's one filter not being met by just a smidge, right? So maybe the price was $201. So that's why we didn't see it come through here. Maybe the market cap wasn't quite 4 billion. Maybe it was 3.9 billion, and that's why it did not get triggered. Okay. So that's typically why something that you think should have come through did not come through. And then it's about going back and analyzing the filters and the stock in question and going, yep, market cap was 3.9 billion. Now I know why it did not get triggered. Which then you have to ask yourself, well, does it make sense to modify this configuration in order to accommodate this one-off stock? Or should I just leave it as it is because that was the original configuration that we thought would be good? So let's just stick with our guns instead of trying to modify the window to get everything, kind of just makes it something that it's not, okay? But that's the way you go about the process using the single stock lookup, is just going back to configure, going to symbol list, and using the single stock lookup. Easy way to troubleshoot. Okay, moving right along here, we've already covered eliminating ETFs with the filter workaround, and now we're going to talk about the Show Me button, okay, which is also resident right in the alert window and also in all top list windows as well. And gonna pop back into configure, gonna go to my filters. And this little guy with the magnifying glass, this is the Show Me button. Notice that when I hover over it, it then says Show Me, okay? And this is a great little tool, especially when you're brand new to the product, to help you make sure you're inputting the proper filter settings, because things can get a little confusing when we start using negatives in these fields. Now, a great example of this functionality, let's use the gap filter. Here's gap. We have it available in dollar and percentage. So I'm just going to add the percentage version here. And notice it just says gap. It doesn't say stocks that are gapping up, stocks that are gapping down. We use it for both, okay? So if I added a 1 in the min field, in addition to these other filters, that would add the criteria, hey, by the way, stock had to have gapped up 1% or more from prior close. Pretty easy. We just put a 1 in the min field, and that would get us a gap up of 1% or higher. Gets a little more complicated when we ask for a gap down. We would have to insert a -1 in the max field, and that would satisfy the requirement of a gap down of 1% or lower. All right. But it can get confusing. So if you're ever unsure that you're inputting the proper settings, we just click on the Show Me icon for the respective filter. We get a separate box to pop up. Notice that it automatically puts us in the In Words tab. I've got no settings in the boxes up here. I've got really nothing in English down here, but as soon as I put a value, 1 in the min field, open was at least 1% above the previous close. -1 in the max field, the open was at least 1% below previous close. Well, what if I put -1s in both fields? Well, that would get you an exact gap down. It'd have to be an exact 1% gap down. Couldn't be 2 or 3. It'd have to be exactly 1. And since you can't break anything in here, I encourage everybody just to play around until you get the settings that you're looking for here. And sometimes you might find things in here that you weren't really after, but once you start plugging and playing with negatives and positives in here, you might go, well, this kind of sounds interesting as well. Open was above previous close. The same, no more than 1% below, or at least 3% below. I mean, it doesn't make a whole lot of sense, but whatever you put in these windows here, it's going to give you the exact effect, right? So anytime you're confused or you might be unsure that you're inputting the proper setting, you just hit that show me icon, make sure you're in the in words tab, and then just start plugging and playing until you get the exact description that you're looking for down here. Now, before this was invented, man, it was pretty painstaking because we'd have to go after the market was closed and go, why didn't this window perform like I thought it would? It was a very painstaking, long process. That's why we invented this, to make it easier for people and users moving forward. All right, so this next tab is pretty cool too, the histogram. Now, once again, notice I don't have anything in the fields here. And I've got this count over here that says 7,784. This is the number of tradable stocks that the Trade Ideas servers had their eyes on pre-market and at the open today. And it's always going to be pretty close to 8,000. It's always going to fluctuate a little bit. So 7,784 candidates that Trade Ideas was watching today. But out of the 7,784, if I put a 1% gap up in here, only 501 stocks met that criteria today, just based on a 1% gap up. Only 500 out of almost 8,000. And of course, we did have some downside action today. So if we look at stocks that gap down, 963. All right, whereas only 500 gapped up 1% or higher, 963 gapping down 1% or lower. And keep in mind, this is just how this one filter impacts total available stocks. So if I said, okay, 1% gap down, and then I wanted to also fold in all of my other filters here, I would use the drop-down menu and say, all my filters. So if I kept all these filters in play here, and then added 1% gap down or lower, there were only 167 stocks that would have met this filter complement today. So the bottom line, the takeaway here is the histogram tab is very good for helping you in real time realize, am I over filtering based on one filter or a selection of filters? Or, am I going to leave myself with enough candidates so that I'm not just sitting here watching a window that never spits anything out? Because if we get a little too crazy here, all of a sudden, available stocks goes down significantly. I got two negative signs in there, that's why. Okay, so now if we say all filters, if we left a gap down of 4% or lower with all the other filters in place, only 10 stocks today out of almost 8,000 would have met the criteria. That's definitely over filtering, right? So that's how we can use the advanced show me button to help us figure out proper filter settings, and then using the histogram tab to give us an idea, are we filtering too much, too little, or is it just right, like Goldilocks and the Three Bears? All right, how to get to the custom formula area. That's easy. We'll just save that for the end of the session here as I'm wrapping everything up. What we're going to do is we're going to jump on to adding color to a top window, and then we'll progress right into the RBI and GBI windows here. Adding color to a top list window. And you might be thinking, well, what about adding color to alert windows and all the other windows? Well, these alert windows here, these two guys right here, colorization is relatively simple. If we right click and go to properties and go select colors, all you do is you select the color of your foreground and your background, okay? That's it. Pretty simple with alert windows. Now, when it comes to a top list window, it's a little more complicated, all right? So here I have a top list. It's just one of my favorite top list windows. It's a volume radar is what I call it. And you can see here all the high relative volume numbers. And that's how this window is currently being sorted. And we've got the very high relative volume numbers at the top here. And as the numbers get smaller and smaller, you'll notice that the monochromatic gradient that I have set up here gets lighter and lighter. Smaller the relative volume number, the lighter the gradient gets. This is the first way that we can apply color to a top list. There are two ways here. The first way is to pick our key metric here, which since this is volume radar, sorting by relative volume here. If I right click and go to configure, you'll see my sort column is relative volume, biggest on top. Now, how do we go about setting up the color scheme here? Well, we right click, we go to properties, and we go to select colors here. Now you can see these are the breakpoint values that I've set up for relative volume and the color scheme assigned to it. What I'm going to do is I'm just going to delete all the colors so we can just kind of start from scratch here. All right, so now we have no gradient, we have no colorization on the top list. So first and foremost, these columns across the top here, or what we could just refer to as filters, we have to pick which one we want to apply our gradient to. Now we're just going to stick with relative volume here. So I would need to make sure I've highlighted relative volume over here to tell the system this is the column that I'd like to apply my gradient to. Now once I do this, I have to pick the numerical breakpoints that I want to set up for the color change here. So we can just pick, these guys are going to kind of throw everything off kilter here. So I'm going to pick increments of 3, 6, 9, 12, 15. Now, it's always a good idea to start with 5. And the reason being is all of these predefined color schemes here, 1, 2, 3, 4, 5, show 5 breakpoints. So it's a good idea to start with 5 numerical breakpoints as well. So all we have to do to get these numbers inserted, put a 3 in here. We're not even going to worry about colors here. We're just going to add the numerical breakpoints. So 3, add. 6, 9, hit add after every one. Okay, there are my 5 breakpoints. 3, 6, 9, 12, 15. Then we just have to click on the color schemes to try them out. Let's try this one. All right, notice how the gradient is getting lighter as the numbers get smaller. So real easy to click through these color schemes and pick which one appeals to you the most. As you can see from the beginning here, I'm more of a monochromatic person. Orange is soothing too, right? Maybe you like red. Maybe you're more of a unicorn color scheme person. I don't know how long I could stare at this before I got nauseated. I'd be more of an orange or a more monochromatic guy. So if I pick orange, I go, yeah, this looks nice and soothing. Then I would click OK, and voila. All right. That's the first way that we can apply color scheme in the form of the gradient and our key metric here in a top list. Now, the second method in which we can apply color to a top list is we can take any of these columns and customize numerical value here and make it stand out. A good example would be, yeah, I got high relative volume over here on all of these stocks. But just because we have high relative volume does not mean that the volume is necessarily active all the time, because obviously these stocks did a lot of volume early on. But there's always the scenario the volume might stay high. A good example would be this stock, XSOE, cranking out 15 on the relative volume. And then I'm looking at the lower time frames here in volume, 5-minute volume, 10-minute volume. Now a value of 100 in these columns is normal volume. So wow, on the 5-minute level, XSOE is doing 97 times normal 5-minute volume and 48 times on the 10-minute level. But look at this guy, FPAC, big relative volume. So there was a flood of volume early on. Okay, finally my chart updated there. Big down move. But look what's happening to volume in the 5 and the 10-minute. If 100 is normal, this thing is only doing 6% on the 5-minute level, 17% on the 10-minute level. I'd say volume has dried up significantly, even though we're seeing high relative volume. And by the way, relative volume is very slow to change, to play catch up. So that's why we can get an idea, is the volume still there? by referencing the 5 and the 10 minute, or the 15 or the 30 minute, whatever floats your boat. But clearly the volume is still in this stock. Clearly the volume is still in PTC for the day. 4 times on the 5 minute, 4.9, 6.5 on the 10 minute. Now, if I wanted to target all the stocks that currently have crazy 5 minute volume, I could always double click up here and resort, but look what happens to my gradient. It gets all thrown out of whack, right? Don't like that. Want to keep my nice color scheme here. But I would like anything in this 5 minute volume column that's doing at least 2.5 times normal 5 minute volume. I'd like it to stand out here with a certain color. So here we go with the second way to add color to a top list. If I want to add custom values to volume in the 5 minute period, I would simply right click in the header, custom colors. You'll notice the mechanism looks pretty similar to what we saw earlier. So I'm going to delete all the colors. I'm going to put in my magic number, 2.5 times, which would be 250% of normal. If it's greater than that, I'd like it to be yellow. So I just clicked on the greater than value and I selected yellow. If it's equal, I'd also like it to be yellow. But if it's less than, we'll keep it dark. Then I add the color scheme. There we go. Click OK. And now we can quickly size up. I can keep my default sort, keep my nice pretty color scheme. Anything that's 2.5 times normal is going to stand out in yellow. So I can just quickly go size these guys up, see if I like what's going on in the chart. If I like what's going on in the chart, I can make the trade and have assurance that the volume not only is still high on the relative side, but is still being maintained on the lower time frames, telling me, yes, indeed, the volume is still kicking in these stocks. It has not dried up. So that's the second way that we can add color to a top list, by customizing each and every metric in the way that I just showed you guys. All right, that's how we add color to a top list in the 2 different formats. Now we're getting to RBI and GBI windows here. And before we cruise on here, I'm just going to quickly peruse, make sure we didn't skip anything here. Looks good, looks good. Compare counts, pre-markets. Now obviously saving back testing and optimization for the last, and we're doing pretty good on time here. All right, so now let's talk about the RBI and GBI windows, which are these guys. I'm just gonna do a little pairing away here. Here we have GBI windows and RBI windows. Now, first and foremost, what does RBI stand for? RBI stands for red bar ignored, and GBI is going to stand for green bar ignored. All right, and this is a pretty neat little pattern that we're going to be looking at here. So let's look at this guy first. Okay, so we got an 11:51. We're looking at the 15-minute candles here, or the setups in the RBI. Of course, I've got my intraday on the 15-minute candles as well. So the last thing to trickle through here, actually we just had CCMP, but let's take a look at WRB. And what we have going on right here is currently an intact red bar ignore pattern. Now it's calling this little doji type candle right here a red bar. Just hard to see here. But what do we have? We have a red bar technically sandwiched between 2 green bars. This is the second half of the pattern. The first half of the pattern, we have to have consecutive green candles leading up to the red bar sandwich. Now this one was just kicked out at 11:51. We've still got 9, scratch that, we've got 8 minutes until this 15-minute candle closes. If this candle closes green, we're going to see WRB come through on the confirmed version as long as this candle closes green. So in essence, it's telling us to ignore the red bar here because we've got consecutive bars leading up to the red bar sandwich, and there's a good chance that this thing might push higher. Therefore, ignore the red bar. Now, there's always a chance that before the next 8 minutes passes and this candle closes, there is a chance that it could close red. If this bar ends up being red before it closes, the pattern has fallen apart and it's no longer valid. Okay, so the non-confirmed version is going to give you the heads up as the pattern is forming, which gives you a little bit of an edge time-wise. Like right now, it looks like WRB is going to close green because it's nice and healthy. Depending on what you might see in the order book, blah, 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 might lead you to believe, yeah, this thing's going to close green, I think. I'm going to go ahead and take the trade versus waiting for the bar to close green. And if it does, we're going to see it come through on the confirmed version as soon as this candle closes and the next one opens, assuming this one closes green. So it gives you more, you can act on it quicker by using the non-confirmed version, which, this thing might push up higher. So you might be able to get a better price, but you're taking more risk using the non-confirmed version. Let's look at one that came through confirmed. Okay. A little bit different looking of a pattern here, but the pattern nonetheless. We've got consecutive candles, 1, 2, 3, 4, leading up to the red bar sandwich that we see right here. Green, red, green. And this one looks like it's holding up. Now I should see an arrow right here. I don't know why it's slow to draw. For some reason my arrow is not appearing here. But this one is confirmed because, yeah, consecutive green bars, red bar sandwich, and a confirmation here. Let's look at one that's currently in formation. CCMP. Once again, we've got 6 minutes before this bar closes. If it closes green, the pattern will be intact, and we'll see the arrow appear in the next 15-minute candle. But once again, we've got the consecutive green bars leading up to the red bar sandwich. These, once again, are typically for bullish continuations to the upside. So we'll wait for this bar to close and we'll see if these confirm. Not a whole lot coming through on the green bar side right now. That one, just a little too thin. Once again, kind of circling back around to what we saw in the pre-market. When I start to see stocks like this with dashes, that just typically says, you know what, avoid me. Also, giveaway is the dash A. Let's look at one that came through the confirmed version here on a green bar ignored. And you know what? I don't know what's going on with my arrows right now because it should be putting an arrow on the candle. All right. So this is the 11:30 tick right here. All right. On a confirmed version. Arrows should be right here in blue pointing up for ICHR because the pattern closed intact. It's just the opposite of the red bar ignore. We got a green bar sandwiched between two red bars. We've got consecutive red bars leading up to the green bar sandwich. So initially, we would have gotten the hit here as this bar was forming. This bar closed red, the pattern was intact, and we get a little push to the downside, trying to make a rebound here. Probably be a good indicator. Can it get through that 10-period fast line there? Is it going to get tapped back down? We just saw an update occur. But the bottom line is this one was confirmed. And if my arrows were functioning properly, we would see an arrow right here as this pattern closed intact. But there was always a chance that this candle could have closed green. Had it happened, pattern would have fallen apart. Just checking my arrow once again. Yeah, the arrows are a little finicky. But once again, here's another good pattern in PAC, consecutive red bars leading to the green bar sandwich, closed intact, confirmed right here, and then we'll see what happens. So once again, green bar ignores typically for shorting or downside movement, red bar ignored typically for bullish type activity going long. So not a whole lot coming through the green bar ignore versions today, but that's no big surprise looking at market conditions today. All right, that gets us through GBI and RBI patterns. So all we really have left here, other than showing you how to get to the custom formula area, which is relatively simple, is having a little back testing fun. And let me pull up something interesting here. Let's see here. What do we want to try to backtest? I'll tell you what we're going to do here. We're just going to create something from scratch. We're going to leave new highs as the alert, something simple. We're going to shave this down a little bit. We're going to use that 4 billion level. 1, 2, 3, 4, 5, 6, 7, 8, 9. We're not going to use this. We're just going to start with something very basic. We're going to weed out ETFs and iShares with our workaround here for the earnings per share filter. Distance from inside market, a quick blurb about this. Very important when we're back testing. In essence, by using a very tight setting of 0.2 in the max field, in a nutshell here, every time an alert is delivered from an alert window, it's being driven by a print from the actual time in sales. So this setting right here is going to assure us that the print that's driving the signal is not happening outside the spread, okay? The inside market is simply the difference between the bid and the offer, and you take the spread into account. That's the inside market. So by having a setting of 0.2%, no more than 0.2% outside of the market, it's going to ensure that all the prints that are generating the alerts are happening at the bid, the offer, or in between the spread. Because a lot of the times when things are printing outside the spread, it's garbage data. In other words, it's a bad tick. We certainly don't want to filter those into our backtest results. If it's a bad tick on the chart from a manual window, we can quickly dismiss it based on that visual confirmation of the chart. But we certainly want to have this in place when we're doing backtesting, because we wouldn't want to fold those bad ticks into our backtest results. So just keep that in mind when you're backtesting. Either have 0.2 or 0.1 in the max field on distance from inside market. All right, let me check my exchanges, just the major US markets, all symbols, with a very simple configuration here on stocks hitting a new high for the day. Now, how do we get to the backtester? We right click, we say, let's backtest this strategy. And now we get to the fun stuff. We've got 1, 2, 3, 4, 5 tabs to get to know and love here. The first tab is the entry tab. What time of the day do we want to backtest? We could start backtesting right on the open. Probably not the best idea because things are moving crazy as far as volatility. Things are just moving very rapidly in the opening 1 to at least the first 5 minutes. Okay, so you might be able to generate decent looking backtest in the first 1 or 2 minutes, but that does not necessarily mean that you could participate and get the prices that you're seeing the backtester generate here. The slippage, in other words, would be too massive. So it's always a very good rule of thumb to at least eliminate, at a bare minimum, the first 5 minutes of the open. I'm the type of cat that typically likes to eliminate the first 15 minutes, get rid of a lot of that noise, but everybody's different. So we're going to say let's skip out the first 15 minutes. Down here is where we tell the system when to stop backtesting. Now, a lot of the times we don't know what might be the productive times of days for certain events. So I always leave it wide open when I'm just getting started here. So we're just going to omit the first 15 minutes. Then we cruise on to the timed exit. The top 2 radio buttons up here are for intraday. We could say, okay, let's try to generate something for intraday hold time of 60 minutes, 90 minutes, all the way out to the full value of 390 minutes, which is how many minutes are in a trading day with 6.5 hours. We got 390 minutes. So if it was an all-day hold, we could just stretch this thing all the way out to the right if that's what we wanted to do. Or the second intraday option is going, you know what, I don't want to hold these all day, but give me an idea of what would happen if I tried to hold these things until an hour before the close, 2 hours before the close, so forth and so on. So these are intraday options up top. And then down here, we've got the swing trading options, which, at least one overnight session All right, let's see what happens if I hold these things and get out at the open tomorrow, or get out at the close tomorrow. One session, one overnight session. Or I could start tacking on days, all the way out to the full backtest period, 62 trading days. So at market open, one session, two sessions, five sessions, just adjust the slider, and we can keep tacking on days and see how that would impact the results. So swing trading hold times down at the bottom, intraday hold times up here at the top. For this example, we'll just leave it on something simple like a 1 hour hold time. Risk management. Stop losses, profit targets, oh my. We can operate in dollars and percentage values. Stop loss, if we wanted to implement a stop loss of say 2%, we would just put a 2 in the box here, make sure we're on percentage value, and then we would be using a 2% stop loss. Up here we could implement profit targets as well. Same motif. 2% stop loss, 3% profit target. We can operate with both, one or the other, or with nothing. You know what, we'll just run a simple example right off the bat with no stop loss, no profit target, just to see what's out there, okay? Advanced. The slider bar down here at the bottom is the number of days we would like to backtest. We can backtest one day, we can backtest the full 62 trading day period there, or anything in the middle. Typically, I run about a 40-day backtest. That's about 2 months on the calendar, but that's just a personal preference. Up here, we've got some advanced exit conditions that we can tack on in addition to a timed hold, a profit target, or a stop loss. Obviously, none is checked currently, but we could say, in addition to stop loss, profit target, or timed hold, let's also add a trailing stop and a percentage value. That'd be a 1% trailing stop in addition to the other 3 exit parameters that we might have set up. And if we have 4 exit criterias, say we have a stop loss, a profit target, a timed hold, and a trailing stop, it's always which one occurs first that'll be used in the backtest. The second option here for trailing stop are bars. These are hard coded at 15-minute bars. So we could say a 1 15-minute bar trailing stop, 2, 3, so forth and so on, but just keep in mind these are 15-minute bars. Lastly here, if we hit configure, you'll notice it pulls up basically a free floating alert window. So we could say, we're developing something to go long here using a daily high as the initial trigger. We could say, you know what, if the stock hits a low, get me out. Now when we come back in here, you'll see if that stock that we took on a new daily high, if it reverses and pops a new low, that would also act as a exit criteria, assuming it happened first. So the cool thing about the advanced section here is you can use a very simple thing like a new high or low or anything from the alert list, or you could create a very complex strategy to act as an exit criteria as well. Get just a little drink of water here. Okay, so that gets us through the advanced tab here. Percent trailing stop, bars trailing stop, 15-minute time frame, or you can create a strategy to act as an exit criteria as well, along with our number of days to backtest here. For this little spin of the wheel, we're just going to check none here. So we're just going to say, okay, after the opening 15 minutes, if we go long this event and hold it for a 60-minute period with no stop loss, what would happen? Simulate buy, simulate a short sell, we'll simulate a buy in this case. Now the backtester is going back over the 40 days, applying the simple rule set, and voila. Now, take note, in that few seconds, the backtester just backtested 4,000 trades, okay? This is one of the underlying superpowers of the backtester. It allows us to power through that massive data set in a few seconds. We could never have done that manually, right? So keep in mind, the backtester, inevitably, we're using it to find conducive data sets to trade on, but man, This thing allows us to power through massive data sets, which in turn allow us to exponentially increase the rate at which we learn, right? So boom, 4,000 trades just got back tested. I mean, everybody out there's probably done some manual back testing. And you know, after about 30 or 40, especially after a long trading day, you're pretty wrecked, right? Your eyes are burning, your shoulders hurt. So that is one of the beautiful things about the back tester, is allowing us to power through these massive data sets. And of course, we got a lot of metrics here to deal with and a couple of equity curves over here. So 1, 2, 3, 4 tabs up top. 1, 2, 3, 4 tabs here. Equity curve over here. Notice we've got, well, if we look at the key down here, sometimes we'll have 3. Now you might notice in the commissions field, I've got a 0. Probably no big surprise as to why I have a 0 in there, because we've recently just witnessed the big race to 0 in all of the major retail broker dealers, everybody going to 0 commissions, which make a pretty big impact in back testing, right? So right now, we've got 2. We've got the gross equity curve up here. We've got the lime green one down here. We got 0 commissions. So the gap between gross and the lime green one down here is simply the slippage that I've built in here. See, I've got 0.02 in there. That's 2 cents of slippage on the entry. Let's say the stock came out at 10 bucks, but by the time you bought it, you paid 10.02. So you took 2 cents of slippage. This also accounts for 2 cents of slippage on the exit price as well. So on a 4,000 trade count, 4 cents makes a pretty big difference here, to the tune of about $4,000, just giving up 4 cents of slippage per trade. And that's probably a little low. You know, if I tap this up to 5, you're automatically going to see the yield curve gap increase. Every time we tick up a penny here, you'll see how that impacts. And it's very eye-opening, because a penny here, a penny there on a large amount of trades, we all know that adds up over time. All right, so obviously on the same note, if I start tacking commission on here, we've got a new equity curve showing up, which is showing us inclusive of commissions and slippage. So if you're not yet in a $0 trading environment, you can apply your applicable commission in the commission field here and slippage down here at the bottom. So obviously, red, this is not something that we would want to just jump into, right? Because there's too much red. But when I see something like this, especially in the backtesting game, I'm thinking, well, maybe I'm just thinking about this wrong. What if I short sold these events? Would it look any better? Interesting. Okay. If I'm a short seller of these events, we've still got red in the strategy return, but nothing like, you know, what we had up here. We're actually making some winning trades by countering these things with a short sell. And most interesting is we've got a decent gap or spread between the average winner and the average loser. The average winner is currently 3 times larger than the average loser. So I just discovered that maybe I should try to develop a short sell strategy versus a long strategy here. Sometimes that's the case, sometimes it's not, but just giving you some general ideas of how to proceed once you get an initial scan done. Now, also keep in mind, we weren't using a stop loss. So what happens if we come back in here and apply a stop loss? Are things going to get worse, or are things going to get better? So now let's implement a 2% stop loss, rerun the scan, and see if the wheels fall off once we apply a stop loss. Okay, so it looks like things basically didn't change that much, which makes me pause for a moment and make sure that I did things properly. Yep, a stop loss of 2%. So a lot of the times we'll see something decent, but when we apply a stop loss to it, the wheels fall off, which tells us, you know, looked good at first, but probably not very translatable into reality. So now I've applied the stop loss. A few things improved slightly here, but more importantly, the wheels didn't fall off. So I know that I have something here that might be valid to work with as far as trying to improve some of these metrics over here. Can we get this to a positive yield curve on the annual, and even though it doesn't say so here, on the monthly? Okay, so when we start trying to improve things, we go to the optimization tab. And in addition to trying to improve things, we've still got 4,000 trades coming through on the back test. So the goal is to improve the statistics while at the same time paring the number of trades down into something that we could feasibly trade and that would be manageable. Right now, 4,000 trades, no way, no way. But we've got a good data set to start with here, is what it appears presently. So I'm going to cruise on over to the optimization tab here. And once again, multiple tabs to get to know and love here. We can optimize by price. We can optimize by time of day. We can even optimize by symbol if that's what we want to do. Or this is where most of the magic happens right here. Other filters. And when I open the drop-down menu, you're going to be presented with every filter that Trade Ideas has. And then we can see if it makes sense to do some optimization based on these specific filters, okay? But first and foremost, let's talk about the simpler ways to optimize. Now, right now, if I say split the price up by increments of 5, then you can see that's what the panel now does. And of course, we didn't apply any metrics to maximum stock price, which brings up a very good point here, okay? Now, we're getting some green here, but we haven't applied a maximum stock price. So what if it's Berkshire Hathaway where all this green is coming through here, all right? I don't think any of us are gonna actually attack that trade if we saw it come up. You know, I haven't even looked at Berkshire in a long time, but it's some ungodly price and the spread is probably enormous. So we get a little happy because we think there might be something here, but watch what happens. If I cap stock price at $1.50 now. Now we rerun the back test. I can tell you, we're probably going to see something different. Ah, well, look, all the green went away. So the reason I wanted to point this out is because that's a very, well, it's one of the mistakes that you know, you make when you're new. You forget to put a maximum price on there. You get excited because you see there might be some green to be had, and then you realize, well, it's a $5,000 stock that's generating all the profits on one trade, okay? So keep that in mind when you're developing your initial basic filter set. Don't forget some of these simple things like capping at maximum stock price. That way we don't get all excited only to find out, nope, as soon as we cap it, all the green goes away. All right, so now we have a more realistic data set. Is it still the same? Do we still have the same kind of tilt, whether we go up or down? And the answer is pretty much yes, okay? We might find something good here and we might not. But now when we run this the scan long, maybe I'm going to flip back to long here and see if I can generate something that might be actually usable. So now when we come back to price and we segregate by $5 increments, a lot of the times, but not all the times, we might be able to weed out some price sets and find out that, hey, this one typically does better for the low dollar price set. Of course, we get little increments of red here, but nothing really stands out. You know, if we saw all red once we got past 55, we could eliminate them because it would make sense. But here, it's just kind of random. So it doesn't really make sense to optimize by price in this case. Now, sometimes strategies do better at certain times of the day. We're looking, 1 minute intervals might be too much here. Looks like most of the trades are being generated after that first 15-minute period. Nothing really to key off of here. That's not uncommon. And symbol. What I will say about optimizing by symbol is right now it's showing me the top 10 stocks that have performed the best in this strategy. Now, take note of the trades, the trade count, 3, 4, 6. This is how many times each one of these stocks has come through in the backtest period of 40 days. So yeah, every time Beyond has come through, it's been a winning trade. But we can't trick ourselves into thinking, well, it says 100% win rate there, therefore the next time Beyond comes through this ticker, it's going to win. It doesn't work like that, okay? Now, I wouldn't really ever optimize by top performing stocks. And by the way, if we wanted to see the top 20, we could do this. Now, where I do find optimization and this information useful is for creating a watch list, okay? And go, Beyond has come through 3 times and it's won every time, but I'm not just going to put blind faith in it. Maybe I create a watch list with a new high ticker with these stocks in it, and when I see it triggered, if I like what's happening on the chart for the day and the risk is in place and everything looks nice and cozy, then I might be compelled to take that trade. But just because it's come through 3 times and has won every time does not indicate that we should put blind faith into it. But it can help us create what I like to call a hot watch list, okay, based on what you're seeing here. So that's all I have to say about optimizing by symbol. Now, where the real fun comes in and where you'll spend most of your time is in this tab, Other Filters. And then sometimes we might want to go straight to some of our favorite filters or just scroll through the list randomly, seeing if there's anything that we can peel off in the form of red, all right? So maybe whether this event is productive or not, maybe it has something to do with what the market is doing for the day. So notice I just scrolled down here to the S&P change filters, and we've got today, change in the 5, 10, 15, and 30-minute period. Well, okay, is there any correlation between what the market is doing today, right? And if I chop this up into increments of 1/10 of 1%, does anything really just stand out here? And look at this nice batch of green right here. We got a high win rate when the S&P is showing these values. We've got a high win rate here. We've basically got a nice little cluster of winning trades right here. And we can see the trade count. We'd be going all the way from 4,000 trades down to, what is that, about a little over 160 trades? Maybe that's where it's at, maybe not. But before I make that decision, let me see if there's any correlation between intraday moves. Okay, here we have something interesting. S&P change in the 30-minute period, all right? Notice how obvious these guys are up here. Well, when the S&P change in a 30-minute period is anywhere between negative 0.6 in the min field all the way out to negative 0.31 in the max field, these trades stink. They all lose. But as soon as we get into these values, we've got a nice area of green. So this would be a good area of red to clip out. And the way we would clip these guys out is we would set minimum value on the change in 30-minute period to minus 0.3. And we've made it real easy to do that right within this panel, as opposed to adding the filter, putting the negative 0.3 in there. If we want to change and add that filter and put negative 0.3 in the min field, all we have to do is right click. Once we do that, it's this first option. Set strategy minimum value of S&P change in the 30-minute period to negative 0.3. Yep, that's what I want to do. It automatically adds the filter and the value for you, and we're going to click OK. So we've made that change. So there's really nothing over here to cap as far as max. So we've just, in essence, weeded out all these guys. Now, what about the 15-minute period? Could we complement it with a 15-minute change as well? Ah, look, more trades that we could clip out just by setting the change in the 15-minute period to -2. All right, we made 2 changes that appear to be conducive. But you know what? Look how drastic we flip things when we get into this area right here. Why keep all these guys? So I tell you what, I'm going to actually modify that to 0.40. All right, so these were the results before we made what we think are some conducive optimizations, adding those 2 filters. Let me make sure these guys stuck. And then we can see, yes, indeed, there are the changes. So now let's rerun this guy. and see if we helped, hurt, or if these changes might have been indifferent completely. But we never know until we spin the wheel once again. Okay, well, sometimes what we think is going to be a positive change is not the case. And, ironically enough, this is what happens a lot of the time. We make a change, it's not what we thought, it didn't help. Actually, things got worse here, okay? We took a trade count down significantly by about 90% from 4,000 to 400, but we're not really seeing any, look, all the trades have disappeared. We're looking on the daily here. We would like to have continuity here between winning and losing days, but man, we just over optimized here. So maybe if we go back and remove that second one and just keep the 30-minute period, maybe that's good. Maybe it's not. But this is the nature of the back test. Okay, so just with that one filter, we made a slight improvement. Took our success rate from 50.3 to 50.9. Looks like the spread between average winner and average loser really didn't do too much there, and we still got way too many trades. So did it help? Yes. Is it by an amount that really doesn't matter a whole lot? Yes, as well. So we just go back to the drawing board here. Let's go back to other filters. Maybe something like a 15-minute RSI might be more conducive. And right off the bat here, my eyes are drawn to this intense green right here where we have 64 and 68.3% win rate and a not so bad number of trades. So maybe the RSI can help us out here. So let's set 15-minute RSI to a minimum of 20. And let's set maximum value to 39.99. And now let's give it one more spin here and see if we did any good. Okay, looks like that one was actually something that made a positive change. Profit factor went from 1.18 to 1.66, that's good. Trade count went from 4,000, not quite down to 1,000, so we eliminated a good 75% of the trades. We've got spread between average winner and loser now. 26 on the average winner, 18 on the average loser, and really improved these stats here, okay? Still in the red, still got a ways to go, but still got enough trades to try to optimize. Now, on the daily, okay, we've got some continuity here. Big day on this day, but if we take that day out, we've got our winning days and our losing days, right? But we've got some nice continuity there on the daily. So we would keep plodding along here to see if we could turn this something into actually something that we would use. Now, a quick word here about what we're seeing in these fields right here. Look at my starting equity of 51,000. Notice my buying power of 202,000. Now, this value here, if we go to the buying power tab here, this is simply showing you how much buying power you would have had to have access to if you wanted to be in every trade on the busiest day, which the busiest day obviously was this guy right here, which coincides with the spike in buying power needed, just a little over 200,000. If you wanted to be in every trade that day, that's how much buying power you would need. Now, if you have a day trading account that's not subject to the pattern day trading rule, you get 4-to-1 intraday leverage at most retail operations. So if you had 51,000 in there, you'd get $204,000 in buying power. So as long as I have enough equity in here to match that on a 4-to-1 ratio, then we have a white color here. Now 50,000 would be just a little too less, so we wouldn't have enough buying power or equity. But as soon as I go like this, and we get a white color in here, letting us know we've got just enough in equity on a 4-to-1 ratio. that means that these projections are going to be accurate, okay? If I had way too much buying power, this goes down, but that's not really what we're looking for here. We want to have just the right amount in there to cover this on a 4-to-1 ratio, and these things are going to become a lot more accurate, okay? So just wanted to point that out. Now, in addition to that, notice I'm also allocating $2,000 per trade. So it doesn't matter about stock price. If it's 150 bucks or it's $2, I'm still going to allocate the same amount of funds to it. But if you do like to go shares per trade, you do have the option to do that, okay, by clicking here. Notice if I'm doing 2,000 shares per trade, all of a sudden we get positive, but that would require almost 14 million in buying power, which most people don't have access to. So just keep that in mind. We can work in dollars or shares. Now, doing a little time check here. Let's try to optimize by one more thing just to see what we might be able to figure out here. Now, interestingly enough, once we've done a little optimization, if we go too small, it doesn't make sense. But notice it was on $20 increments here. And it looks like now that we've done a little optimization through other filters, that stocks between 0 and 40, they just don't do so well. Okay. Maybe I should set my minimum value to 40. Now that the data set has matured a little bit, and re-back test. All right, see, we've made progress, okay? We're slowly getting to where we want to be, and after I made a couple of filter modifications and optimizations, then something jumped out at me in the optimization by price, okay? So sometimes we can come back to this and make something, make a change that actually is beneficial, which we just saw in this case here. So now we're getting very close to actually having something that might work. We're getting very close to profitability here, and we've still got 645 trades coming through on a 40-day period, which gives us leeway for more filtering here. Looks like, you know, we're holding up as far as the continuity goes. It dries up a little bit from time to time, but very rarely are you going to develop a strategy that has winning trades every day, okay? But when this one does perform, it looks like we're on the right track now. So as you can see, you know, we've just kind of scratched the surface on getting the back test started and how to go about some simple optimization. Looks like I could even probably go through here and cap maximum price at 119.99 and improve the strategy even further. Looks like it degrades once we get to these price levels, but so forth and so on. You know, I think everybody gets the general gist now of how to go about the optimization process. Of course, if you guys ever have any questions as you're going through this, you can always email us at info@trade-ideas.com. Another great resource, which is going to be going on tomorrow, is the Friday support session, which starts at 11 a.m. Eastern, and we allocate 3 hours for that bad boy. Usually go 2 hours minimum, but if the crowd is rowdy, we will stretch it out for the full 3 hours. So if you'd like more, keep in mind that that's going on tomorrow. So if you don't have anything booked, come and see us at the support session for tomorrow. All in all, I hope the back testing and optimization made sense to everybody. Lastly, before we head out here, I am going to show everybody on the way out how to get to the custom formula area of Trade Ideas so that when you decide you're ready to start experimenting with custom formulas, you know where to go. So here we are at the Trade Ideas homepage. Easiest way to get there is to click on Help. And you're going to scroll down here and you're going to open up the Traders Area folder. And once you get that guy opened up, you're going to just click on Formula Editor. This is what it's going to look like if you're not logged into the website. Notice I've got my credentials up here, but I'm not logged in, and these are the same. This is the same username and password as you use for the client. But if I do log in, then boom, these are all of my existing custom formulas. And when we create a new custom formula, we just simply scroll down here and pick one of the U prefixes that's not being used. And then we can create a new custom formula by posting our formulas in here and modifying them, multiplying them together, subtracting them, dividing them, all the basic math functions, stringing them together. It is a in-depth process to get used to. But fear not, we do have what we might refer to as the owner's manual. So whether you're logged in or not logged in, you're always going to have access to this PDF document. And when you open it up here, everything you could hope to know about using the formula editor. And as we always like to say, no coding experience is necessary. However, certainly doesn't hurt, right? But you don't need to know how to code to get in here and start mixing it up with custom formulas. This is the owner's manual, so to speak. If we scroll down further, you'll come to these links that will show you all of the existing formulas for every filter that we currently have. And when you click on it, you'll see every filter and the respective code that makes up that filter. And then you'll just start piecemealing these things together. As I said earlier, you can multiply them, subtract them, stack them, so forth and so on. So that's how you get to the custom area. Once again, I'm just going to back out and walk through that process one more time before I let you guys get back to your day. So once again, from the home page, help, traders area, and then formula editor. Now, it does make a lot of sense once you open up the help document, either bookmark it or simply save it to your desktop for quick and easy access. That way, when you need it, it's right there. You don't have to go hunting for it. And once again, if you ever run into a brick wall when you're trying to create custom formulas, just pop us an email, info@trade-ideas.com, attention custom formula help, and we'll always try to get you some help as soon as possible. So just keep in mind, this is something that takes a little getting used to. It takes a while to master it, but now you know how to get there if you want to start tackling custom formulas. Other than that, this concludes the 401 session. I hope everybody learned a thing or two. And don't forget about the Friday support session kicking off at 11 a.m. Eastern tomorrow. Hopefully we see everybody in there. And thanks a lot. We'll see you on the flip side. Bye-bye.